Good morning. All right. Well, markets are a little shaky, I think, this morning. Maybe just getting a little nervous at these heights. Been grinding up after all. Here was the pullback, and it's, yesterday the range expanded. We're looking at the Russell futures. We'll get to the spiders. So it was a pretty strong rally day as the markets went higher. And hopefully this is in anticipation of this corona lockdown starting to come to an end and getting back to a normal life. But so here was the pullback. It was actually the area where on the ETFs you see the bull trap and then the bear trap, and this has been grinding up, but several days up in a range expansion. Into this resistance right to the left here. It makes sense to see a little selling here. And we say look at it objectively, and I always do say almost at every pre-market, this bar isn't done yet. It's just the beginning of the day. But when we see this bar forming like this, say we're in a swing trade. So we want to look at it objectively. We don't want to give up a position just because of a little gyration intraday. But we can look at something like this and just know the range and say, oh, whatever this range is, actually we can see it right here. This is the prior day and today, since this is just opening, and this says this is the prior day. That's today. That's correct. So 717 points. And so we just say, well, if that retraces more than half of that, I'm a little concerned. Obviously, if it traces all of it, well, I'm very concerned. So a little bit more than halfway retracement into that, but the beginning of the day. Ultimately, at the end of the day, the question is, did it retrace all of yesterday's bullish range? Did it close below it? So as we look at things day to day, bar by bar analysis, first line in the sand of support is the prior day's low. And I say as prices turned here, there's a little blip under there, and I just moved up, never broke the prior day's low. It still hasn't broken the prior day's low. So we have a little selling here. At the moment, I say, well, ideally it would have not retraced this much, but not a big deal. But as you can see, it's continuing to drop here as I speak. The hourly chart is still in an uptrend. So as intraday traders, right, you might say, I see someone post in the green room here, should be shorting YM. And this is on a 180-minute chart. Let's go to the 60-minute chart. And so you get, as a trader, you get to pick your strategies as to what you're going to short based on what. So you might say, well, if the hourly is in an uptrend, I'm not going to short unless it's gotten climactic or it's up into an area of resistance where it's likely to turn back down. And as an intraday trade, I would consider that. And so what you see here is on the hourly chart, the momentum slowed. Some of you indicator aficionados might say, well, how do I know that since I don't have an indicator? Right? Well, that's momentum. And you see as it moved up, you see as the highs start to get closer together. Ultimately, it violated major support. So you could say, well, based on this momentum move and this time correction and break of major support, I'm then allowed to go down to this 5-minute time frame and short, looking for a move down to the next level. That's a trading plan. Based on multiple time frame analysis, it's subjective. You then add your money management, your position management, and you're starting to act like a professional. Okay, so there's a little lesson for the day. Looking at, and this has been weaker, right? Looking at ES, similar patterns, and you see kind of the same thing. The rally day, gap fill, 200 lurking up above here, and retracing into the prior bar. But again, maybe a little bit more than halfway. And more of a concern, as I see it, a concern, we have no confirmation yet, is we'll see where this ends by the end of the week, but this breakout on the weekly chart, is this starting to turn into a topping tail? We don't know yet. This bar isn't complete yet either. So on Friday, if this looks like a topping tail, well, the process then, the questioning process begins. Well, does it violate this week's low next week? And if it does that, we're going to have a breakout failure. Right? So we'll just keep that in mind because, look, the other side of this is, hey, we got an intraday pullback here. This might be another green bar by the end of the day, tagging the 200 MA. And this is up at the high of the week. So we're constantly in a process of analysis of multiple time frames, support, resistance, relative strength, relative weakness, and what we talk about each day in the green room. And here pre-market, we get a glimpse of all of that. All right, so as we see this pullback in the ES, well, the bottoming tail bar there is going to be a little shelf of support, which you can see right here on the 15. But the way this is going down, I kind of think it's going to go through it, but that's just a thought. You can see it's still moving to the downside, and so theoretically somewhere it's going to come down there, and that's where the buyers need to step up and protect this move from yesterday. All right, we never like to see a bullish day like this where the range expands and get completely negated. Right? But once the buyers step up here, who's to say this doesn't rally all the way back up to the high? Right? So we'll see. This is where the buyers should step up. And Qs were really strong yesterday. They had been lagging for a little while, and you can see they're still stronger. They're far from that low there. So still showing relative strength, only at the top of the wide range bar. That's bullish. Maybe if it stays there, get a 1, 2, 3, and it's back up tomorrow. Russell kind of bringing up the rear, and now it's kind of going all the way back down here, almost down to the low. So we've got some mixed messages here. The Russell, which has been doing good, we've been talking about for the last couple of weeks prior, this bullish pattern here, even when markets were weak. I was saying this is kind of the fly in the ointment for the bear case where, this was holding here and starting to turn back up again. And it did turn up. And while it hasn't reached this resistance area, well, pre-market, it's already almost back down to yesterday's low. So look, power moves like this, right? That big wide range candle, that power move says it's supposed to keep going up. And as it goes sideways here, the idea is it's supposed to create support and then continue to go higher, not give back the whole gain. So this is not good. When it gets down here, we'll just have to see what the buyers are going to do. All right, oil, let's just go to the month that doesn't look crazy. Got a little bit of a trading range after the drop here. It's up at resistance. So a little sellers and a little M top there, but in an uptrend. So based on what I showed you before about using daily 65 for shorting, this would not be a good opportunity to short, even though you see it rolled over here. The reward to risk isn't very good, right? Not like it was with YM. Right? Bonds just chopping around here. And I tell you what makes me think here, yesterday was, you couldn't deny the strength there for sure, right? But why didn't bond market roll over here? Interest rates move up a little bit. It's still in a range, but you like to see these intermarket relationships, play out the way they're supposed to. And when they don't, kind of look at it like, well, that other market's still strong. You can't fight that. But why is this thing kind of dead in the water here? Well, we'll just see. It's getting tight. This is what we call the spring is getting wound as to which way it's going to go. Gold down a little bit here today, just chopping around. Not sure what that's going to do. And earlier when here, I thought maybe it would pull back further, but it didn't. I don't like these buy setups that are so close to the prior high because this is what they do. You know, they hit there and then they start chopping around. But anyway, so we'll just see where that is in the coming days. Silver been lagging. This pattern, I stay away. That's called, of course, a stay away pattern. It's getting tight here. You see how the 20 and the 50 simple are starting to touch. It popped up, it popped down, it's in the middle. They just don't know what the hell to do with it. So I think it's just best to stay away. And let's look at the spiders. So 291. And still above yesterday's low, but gapping down. Right? Gapping down here almost to the low. And this, because it doesn't have the 24-hour time frame in this, you got this narrower bar. And so if it closes below here, we get another, bearish turn within this upward move. It's at resistance here, but we see that buyers have shown up on every single dip and have taken it higher. So this market has proven to us that even bearish patterns like this, the gap up, the new high, the gap down, they're willing to buy almost anything, meaning pattern, if it's at support. So based on this, the difference here is this was a choppy sideways pattern, and this was still choppy until it took out the high, but you could see sideways and then a grind higher. So as I look at something, a pattern like this, it should hold this area. I know these lines are red, but anyway, this should not pull back to here. Any pullback should stop in this area here, and we should get some sideways price action. That's the bullish scenario, and then it pushes higher. Obvious place would be 300 and the 200 MA. So we'll see how it all unfolds. Right now, sellers have control. Qs, obviously more bullish, gapping to the high of that big red bar. It couldn't take out the swing high. Coming in here a little bit, so a little bit more schizophrenic kind of price action. We'll see where this ends the day. The bull case, you want to see it staying up here, obviously not closing down below yesterday's low. Russell, right, 131, right, already gapping below the low. Not a good sign, right? Even though this is broken out and trended up, you don't like to see gaps below a bar like that that's gapped up and showed such strength. Well, clearly looks like the beginning of a turn here, short term within this move up. Transports, they participated the last few days. That's a good thing. They took out resistance. They took out the 50. That's all good. And as we look at the weekly, the last thing we want to see here next week is a break below that low in any of these markets, because the weeklies are in downtrends. All right, and if there's anything else, SPX. Today's Thursday, isn't it? You guys want to do SPX? We did good yesterday. We kind of sweat that one out a little bit on the bear call side. I know I did a little bit. Worked out, and we collected that premium at the end of the day. End of month today. I got you right. You know what? This month has been kind of crazy for me in a few ways, but this Corona thing, I'm so sick of the news. I don't even turn on the TV this morning. I'm like, I don't want to hear the same old crap. Anyway, SPX. Well, the call side, I'll use the word loosely, should be a no-brainer if there's premium, based on this pullback that we're seeing. So anywhere above yesterday's high should be fine. And on the put side, well, I would say below, you know, here, 28.50, 60. And we think that this would hold. Let me just look at spiders here. Where are they? 291. Yeah, I think, you know, look, if it breaks below here, something's wrong, right? After yesterday, but that would be a really deep retracement. So we always looking for juice, as Dan calls it, below what should be an obvious support point, right? Can't get premium there. So you're saying 29.70 has premium. Oh, up above. Okay, that's fine. Down below, 28.60. I like that. Yes. Yeah, perfect. 55. I'll take a little bit less for that extra few points. Absolutely. I'd do that. Yeah, so good. Down below here, up above there. That's great. All right, I said enough. All yours, Dan.
All right, good morning. Yeah, I just had another subscriber email me asking about levels, both for the Russell and SPX for the end of the month trades. YouTube was asking about FXI. FXI is down here pre-market, but it's a 1, 2, 3. Kind of, not text. Well, you know what? It's not a 1, 2, 3. I take that back. This would need to be a green bar, and then that would have to be an inside day. But nevertheless, yesterday, like many things, negated. It had a deep gap, negating the red bar with a little bit of price void. That one's not a great one, and it's gapping down. So I don't see anything compelling there in FXI. XRT. XRT, it's up 5 days, doji bar, price void on the daily, but it's gapping right down to minor support. So that's not great either. Intraday, you got support below, resistance above. I don't know, maybe 30-minute low. Let's take a look at our opens here real quick. Don't have that many at all. In the weekly options trader, DKS. We have a put spread that expires tomorrow. It's fine. It's far away. We got the 25.5 put, so that's $5 lower. Rad, we shorted the 13.11, $2.50 lower. Spiders, on the 30-minute high, we sold a put spread that expires tomorrow, but it's a 285, so we still have $6 of cushion. I think JR is asking about LUV. It was a bearish descending triangle, but then it had earnings yesterday. I like the pickup in volume after a breakdown failure. It was gapping up. It's coming in now. So, you know, you're going to hear me say I'm not interested in a lot of stuff here and that I need more information. I mean, the bullish gap's negated. It's under support on the 15. You just got to watch it. I don't know. But the daily is more bullish because it's so oversold and you got a nice reversal on volume. Airlines have been perking. AAL, UAL, Save, JetBlue. We actually are in Jets, the ETF. The swing and options trader, let me go through these real quick. APT, we bought that breakout on Monday and we're still sitting in it. Cal, we entered yesterday. Relative strength, look at it. Only gapping down a few pennies here. Holding strength on the 15. We sold a third in the strength yesterday. CCL, we're still long. cruise ships were all gapping up earlier. We sold a third into strength and tightened the stop. So we're going to lock in a home run gain on that. DRI, we have a put spread far away, the 60.50. So that's $16 away. Here's our short strike. LPSN, we're long stock and I tightened the stop. MPC, we sold a third into strength and I tightened the stop, locking in again. And finally, Tilray, we have a covered call where I tighten the stop also to lock in the gains. Ton of gappers here, earnings. Shop, I don't know if it's earnings, but I saw it down $10 after this big run. It's at all-time highs, but we'll watch it for a call spread. CHK, remember this dog did a reverse split down here? I think it was what, under $1 or something? I forget the exact price that it was at. Reverse split. Now it's gapping down almost $10. That is damaged goods. I wouldn't touch that thing. EA. Hey, Greg, what on a scale of 1 to 10, what would you rank this in terms of quality as a bullish pattern? Anyone? McGraw, what about you? 1? The reason I asked that, Steve, the reason I asked that ended up in my inbox, some option newsletter, gave this a bullish technical rating. You ready for this? 9 out of 10. 9 out of 10. He said that's a bullish pattern. I just don't understand people. Now, bearing your drop down, please. So yeah, EA we were watching yesterday is a bear call credit spread, and I still am. This is a bear 1, 2, 3, 4. WLTW. I think it's earnings. So that's a 30-minute low. This is on our short watch list and call spread. Yeah, Ganga, we got Russell and SPX. Yeah, we'll watch them, sure. Wow, I saw Twitter way up this morning. Look at this. I don't know if that's a victim of the market or they had a conference call, but that's damaged now. Jeff, we'll use 5-minute low. When the market's weak, I use tighter. So actually, let me do that right now. Yeah, we're. Yeah, I had moved stop. $430, end of the month. Alta subscribers. Yeah, we'll have to keep an eye on. Well, we have I'm always tight, like trail stops. So even our MPC, CCL, Cal. I mean, they're all gonna, if they get trail stopped out, they're gonna be a nice gains. We're actually fairly light now in both letters. The swing letter, when we were pushing the throttle on the turn, we had like 25 opens. We were stopping out of a lot of stuff with nice gains. Continuing here, TPR. No pattern, gapping down up 3 days. We'll come back to it. I don't like the no volume. That's garbage. Ed's asking about SYY. It looks like it's opening flat. It's up 5 days. I mean, we were in this, and I think it just hit our tight stop 2 days ago. So Ed, I have no idea what you're asking me right now, and that's always, folks, that would help Greg and me. Tell me what you're thinking, because otherwise I could be answering something that you have no interest in. Tap gapping down, 44 bucks, mid range, nothing to do with that. Oh, Ed, then you just trail stop. Just trail stop them. That's fine. It's strong. It's just, that's easy management. That was a nice ascending triangle breakout. That is a beautiful pattern. I think old Debbie gave that one to me. So that's your answer. Just trail. Looks good. SWK, say it's light volume. I see one print at 118. We'll come back to you in 30 minutes. Sting. This was one of the oil storage that we were looking at. It turned sloppy. That's a tough sector to trade. Jason, AZN, gapping up, 54 bucks, bullish gap, but I don't trade those that have run so far. So you got no setup on the daily, you got no setup on the 15. I don't even know if you're thinking long or short again, so you got to tell me what you're thinking. But I see nothing of interest to comment on. I don't see any pre-market prints, but this was a beautiful breakout. Red bar ignored. That was a buy yesterday over the red bar's high. This one, did I lose my pre-market? No, so a lot of these just aren't showing on pre-market volume, so I got no opinion on them. This one's down a little bit, was a bottoming pattern, SPG. That's Simon, that's properties. You know, they're going to get beat up with the malls not paying their rent. I was watching it down here, and then I stopped watching it. It's kind of a, you know, triple bottom. We can keep an eye on that to sell some puts. Ray Rothstein works at AZN. See, Ray, with a name like that, I would have guessed you work at Axe Capital. Do you know why I say that, Debbie? Ray Rothstein. No, you work at Axe Capital. Does anyone know why I say that? All right, what do we got here? Is it too early for jokes? Come on, you all, that was an easy one. There you go, Bob, thank you. On billions, isn't there a Ray Rothstein on that show? Or it sure sounds like it. All right, look, upper right here, WLTW I like as a short. That's a beautiful pattern, beautiful pattern. Bear 1, 2, 3, 4, 5. It's just, it depends how aggressive you want to be on an earnings stock 1 minute after they open. I don't chase them. Many times you lose, many like that, you know, I wait 5 minutes minimum, but 5 minutes, see, look at that. If you shorted that, then it's already a buck and change in your face. All right, SO is a big mess, but possibly SIX was on my garbage list. It had a nice breakout, had earnings today and it's coming in. Yeah, so Bob, I've been watching Billions. It's well done. I like it. Remember Zoom yesterday? I said was a call spread candidate, and I didn't make it official. No pattern here. You know what? This is actually a descending triangle that could break to the upside. You know, the majority of these patterns are continuation patterns, but this one has the feel like it wants to break out of this. I'll keep an eye on that.